Today, we're taking a shortcut into what might be one of the world's most valuable but hardest to crack tech markets,
Yeah,
Japan.
that's right.
Your mission, should you choose to accept it, is to get a really fast, thorough understanding of the Japanese ICT landscape.
Yeah.
We're talking market scale, the hot trends, and maybe most importantly, the cultural and logistical hurdles you just have to get right.
And we're basing all of this on some fantastic core documents from JICA, the Japan International Cooperation Agency.
Exactly.
So really, what we're looking at is a roadmap. It's a roadmap to entering the world's fourth largest ICT market.
Fourth largest, that's huge.
It is. We're talking over 130 billion US dollars in 2024. But it's not just the size. The sources really stress the high purchasing power and, the potential for these incredibly stable long-term business relationships.
If you get the entry strategy right.
That is the big if.
Okay, so let's unpack that. What makes this moment right now the time for foreign tech companies to be looking east?
It comes down to a profound domestic need. There's this huge, sustained demand for digital transformation. They call it DX over there. For system integration, outsourcing,
Across all industries.
all of them. Manufacturing, logistics, even smart city projects. Every sector is trying to upgrade, and they're trying to do it fast.
And this is where it gets interesting because there's a vulnerability here that creates a massive opening, right?
A huge one.
Japan is, globally famous for its hardware. They have the keiretsu, those big interconnected corporate networks, and their multi-level tier supply chains are legendary.
Rock solid.
But the source material is explicit. It calls software the weak area of their high-tech industry. That soft spot is the exact gap that foreign companies are needed to fill.
Precisely. And that gap is made so much worse by the single biggest problem their economy is facing.
The talent shortage.
The overwhelming and frankly worsening shortage of IT human resources. Some estimates in the sources say the shortage could hit almost 0.8 million people. The local supply of talent just cannot keep pace with this huge DX push.
And here's the stat that I think really shows the structure of the opportunity. It's about where IT people actually work. In Japan, only 28% of them work inside the user companies.
Right. Inside the banks, the car makers, the retailers.
So they have to rely on external vendors.
Mm-hmm.
Now, compare that to the US, where the number is, 65%?
65.4% to be exact. It's a completely different operational model. In Japan, relying on outside IT providers isn't a temporary fix.
It's the default setting.
It's the default and necessary model, and that immediately turns that HR crisis into a massive, immediate business opportunity for international vendors.
So the target is crystal clear. Let's pivot to where the money's going. The hottest trends, DX, AI, and IoT.
And this is where it gets fascinating, especially with AI, because Japan has made a very strategic choice on regulation.
How so?
Well, compared to the EU or even the US, which are often very cautious, Japan's regulations are relatively relaxed. The government is actively promoting AI adoption, not trying to limit it.
Okay, give me a concrete example of that. What does relaxed actually mean for a tech company?
The big one is data for AI training. In Japan, it is permitted to use copyrighted material for AI learning, even for profit purposes.
Whoa, okay, that's a world away from the EU's opt-out rule.
Completely. And it's also much more permissive than the UK's stance, which is often a not good or NG on that front. Japan is basically removing hurdles because they need AI to help solve that human resource problem.
So let's connect that to the real world. Where is this AI actually being used? The source material listed a few key sectors.
Right. In medical, it's huge for image diagnosis support, genetic analysis.
And in manufacturing, I saw it's about automating quality control and predictive maintenance, keeping the assembly lines running.
Exactly. Then you have retail and logistics, where AI is optimizing delivery routes, forecasting demand, which is critical with their demographics.
In fintech, asset management, fraud detection, it's really everywhere.
It's infiltrating every layer of the economy.
The source has also made a point that these opportunities aren't just in Tokyo.
Absolutely not. A lot of the big non-ICT industries are in regional areas. Think about the auto industry around Toyota or Hiroshima or precision machinery in Nagano.
And those places have an even bigger IT talent shortage.
Far worse. And that's why you'll often find that the local governments there have much better incentive programs and subsidies to attract foreign tech companies than you might even find in central Tokyo.
Okay, so the tech and the demand all point to a massive upside. But now we have to hit the reality check.
The big one.
The cultural and linguistic wall. This seems to be where most attempts fail.
It is the single biggest challenge, and it's simple, really. Most Japanese business is done entirely in Japanese. Finding English-speaking staff is not common, especially outside the big cities.
So if your B2B product isn't fully in Japanese, you're dead on arrival.
You've pretty much failed before you've even started, and then the business culture itself adds whole other layers of complexity.
Time and trust.
Exactly. Business is built on mutual trust, and building that takes a lot of time and patience. The decision-making process is famously long. It's group-based.
So you need consensus from everyone involved.
Every single stakeholder has to agree, which means a great first meeting.
It's just step 0.
It means nothing more than that. And then you have the communication style itself. It's incredibly indirect.
This is the reading the air concept, right? Kuki wo yomu.
That's it. You have to understand what is not being said. If you miss the underlying feeling of a meeting, you can completely misread the entire situation.
That has huge implications for software companies, especially for something standard like an ERP or CRM system.
It means you need heavy localization, and I don't just mean translating the words, I mean everything. The user interface, the support docs, the actual functions have to be adapted to Japanese business culture, their accounting rules, their laws. If your product doesn't feel Japanese, you'll lose to a local competitor every time.
That sounds like a massive investment. Does that basically close the door for smaller SaaS companies?
For core business systems like ERP, the sources suggest yes, pretty much, unless you're willing to go all in. Smaller firms have to be smarter, target very specific verticals where there's less cultural stuff to deal with.
Like what?
Things like embedded systems, certain fintech niches, that kind of thing. But if you're trying to sell a general business tool, that heavy localization is just non-negotiable.
Okay, let's get super practical. Communication tools. This is a classic mistake.
It's a critical one. You can't just assume global norms apply. In Japan, the messaging app line has a, 91.2% market share? It's everywhere.
And trying to use WhatsApp or LinkedIn for business.
The source material calls it virtually impossible. If you send a client a WhatsApp message, you're basically shouting that you don't understand their culture.
And there goes all that trust you tried to build.
Instantly. The safe professional standard is still just email.
Okay, so let's move to the practical entry steps. If trust is everything, how do you even begin to build it?
The sources are really clear on this. It's all about referrals and recommendations.
You need someone to vouch for you.
You need that stamp of legitimacy. But to get those first introductions, trade shows are a really effective starting point. Japan IT Week, JITW, is the big one.
And it actually works.
The case studies say yes. One JICA-backed event led to companies swapping 286 business cards, setting up 53 meetings, and getting serious interest from giants like Toyota and SoftBank.
Okay, so you get the leads, you build trust, now you need a legal entity. What are the options?
You have 3 main routes. The traditional one is the KK, or a joint stock corporation. It costs more to register, about 250,000 yen, and you have to publicly disclose your financials.
Option 2.
The GK, or Goto Kaisha, it's their version of an LLC. It's cheaper, around 100,000 yen, less formal, and this is the key part.
Yes.
Less public financial disclosure, which is why huge foreign tech companies, Apple, Amazon, even OpenAI, all use the GK structure.
That tells you everything you need to know about what they value, privacy and flexibility.
Yeah.
And the third, simplest option.
A branch, office, super simple, no paid-in capital required. But the foreign parent company is on the hook for all of its debts.
Got it. Final admin hurdles. Capital and visas. This seems tricky.
It is. The law says you can incorporate with just 1 yen. But that's misleading.
Right.
To get the business manager visa you need to actually run the company should really have a capital of at least 5 million yen.
So about $40,000 or so.
Roughly. That capital is directly tied to getting your certificate of eligibility, which is the first step in a very long visa process.
And what about regulatory compliance? Anything unique we should know?
2 big things. First, data protection. Japan's law, the ATPI, is different from GDPR because it also applies to handling anonymized data. That's a key difference.
Okay. And number 2?
Security trade control. Japan is very strict about preventing technology transfer that could have military applications. This can apply to things you might not expect, like certain encryption software or even some embedded systems. It's a non-negotiable you have to check.
So after all that, what's the bottom line for you, the tech company, looking at Japan? It seems like this massive opportunity, driven by DX and that desperate HR shortage.
But it's countered by these very significant cultural, linguistic, and logistical
It's
walls.
a real duality.
It is.
Yeah.
So the takeaway is, if you want high margin entry, you need to be strategic. Target sectors that need less cultural tweaking.
Like game development.
Game development, specific fintech tools, embedded systems, smart manufacturing tech. Or if you go for the custom development space, you have to use experienced local partners to help you compete against the dominant players, especially from places like Vietnam.
That duality really is the defining feature. Okay, as we finish up this deep dive, here's a final provocative thought for you to chew on.
I'm listening.
We've talked about Japan's strong government push for AI to solve its labor shortage. And we've talked about its uniquely relaxed rules on using data for AI training. So should foreign tech companies see Japan not just as a consumer market to sell to, but as a critical strategic hub to actually develop, train, and test their next generation AI?
That is a very interesting question.
Something to think about when you're drafting that next global strategy.